Good morning, good afternoon, good evening, ladies and gentlemen, and welcome to the Digital Central European FP&A Board, where today we will talk about why driver-based planning matters for FP&A. And on this point as well, we know what we're going through at the moment with Russia and Ukraine. So another black swan, one of the more key reasons why we need driver-based planning for FP&A. My name is Hans Gobin. I am FP&A Trends Ambassador, and I will be facilitating this meeting today. Just so you know, we are joined by almost 250 people on this call from 50 countries across the world. And we also have 4 great presenters with great insight awaiting you shortly. So please stay with us for the whole 90 minutes. And with that, let's look at what have we discussed before. So please read that in your own leisure time in the geographies before. What do we have as agenda for you today? So today I will quickly take you through FP&A evolution. How did we move from traditional budgeting to a digital driver-based planning model? We will then have a business case study from Swarovski on how they use driver-based planning and predictive planning as well. We will then go on to look at how should we be connecting stakeholder management and driver-based planning, and also linking strategy as far as that goes. We will look at mindset change for better driver-based planning, a little bit of black swan coming in there, uncertainty coming in there, the COVID, and how we've had to change our mindset to take us through that. And finally, we will look at technology and what technology can do for us to help us with driver-based planning. We will do conclusions and recommendation, and then the most exciting part of our meeting will be the Q&A session. Just to remind you, you can send your questions and we will answer them via the chat box. Of course, we've got a live session to answer them as well. So what next? It is now a great time for me to introduce the 4 panelists we have. So members of the panel, why don't you switch on your camera and come off mute while I introduce you. So to start off with, we've got Michael Nudelman, who is Director Controlling Head of Corporate FP&A at Swarovski. And today he will talk to us about his business case and how he uses driver-based planning within his workplace. And as you can see, Michael is sitting in his car. He normally is based in Switzerland, but joins us from Romania today. Michael, hello, great to have you with us today.
Hello, Hans, and hello, everyone. Thank you. It's a pleasure to be here. And yes, as Hans mentioned, we have irregular times. And yes, I'm today connected from the border between Romania and Moldova. But I'm also very much interested in being part of this panel. Thank you, Hans.
Fantastic, Michael. Thank you. Michael will be here for the first half an hour of the meeting, and then we'll have to leave. So, Michael, thank you. Let's move on to our second speaker today, who is Rudy van Dijk, Global FP&A Director at Tip Trader Services. And today, Michael will show us how he has connected stakeholder management and driver-based planning and how they work hand in hand. Michael is based in Netherlands. Hi, Michael. Hi, Rudy. Nice to have you with us.
Yeah, I'm looking forward for the presentation. I've been often listening into previous FP&A boards. This is a nice environment and way of sharing experiences across the globe, you could say, and use that hopefully for your own useful way of improving your own business.
Thank you, Rudy. And I love that name, Van Dijk, as I told you, because the central back of Liverpool is Van Dijk. So great to have you with us. Thank you. Our third speaker for today is Ronald Human-Hilario, who is Regional Head of Financial Controlling at Mincer SA. And Ronald will take us through mindset change that his FP&A team had to go through, especially during the COVID period, and how all of that was linked to driver-based planning, strategic planning. Ronald joins us from Lima in Peru. Hi, Ronald. Great to have you with us.
Hello, good afternoon with everyone. I am from Machu Picchu, Peru, and I have a story for you because here in Peru, we were living in a terrible era due to COVID-19, and I have a story from that kind of environment dealing with driver-based planning. Okay, and I'm totally sure that this story can help you in that times.
Fantastic. Thank you very much, Ronald. We look forward to your slides shortly. Finally, we have Michael Lengenfelder, who is head of FP&A product management at Unit4, and he will show us and share with us how technology can support us to do better driver-based planning. And of course, Michael joins us from Austria. Hi, Michael.
Hi, Hans. Thanks for having me. Very much looking forward to our session today. Fantastic.
We've got great 4 panelists and great 4 presentation coming for you guys shortly. So please stay with us. In the meantime, panelists, if you want to turn your webcam off and go on mute whilst I go through a few housekeeping slides that I've got. Thank you. FP&A Trends Group, you all know about FP&A Trends Group very well. We are in 27 cities, 16 countries, and 4 continents, and today we bring the Central European countries together. Just as a quick reminder there, we also provide now best practice workshop and FP&A consultancy to our members. So if you have anything, please look us up. What is the FP&A Digital Board? Guys, I know I keep harping on this, but we do have a lot of new people joining us all the time. So it is a 90 minutes webinar. There's 4 polling questions on the webinar subject, and we really need your insight on those, so please vote. We have a very good Q&A session at the end. Please ask your question via the chat box. Tell us who you want the question to go to. We will answer, a few of them today. Because of time, we can't answer everything, but we will answer all of them via email to yourself. So please ask, don't hesitate. You can network with us, all the speakers, directly via LinkedIn. The presentation, as you know, is available in handouts for you to download now, or you will get a copy of the recording and presentation within 2 days after the meeting. Once I close the meeting, please stay with us for another 30 seconds. There is a feedback session that will pop up. Give us your feedback. How well did we do? Is there anything that you would like to listen to in the next few sessions that come up? So please stay with us for that and give us that feedback. A very quick thank you to Unit4, who is our technology partner and sponsor today. We all know Unit4 very well. They are a global leader in enterprise cloud software for people-centric organizations. So thank you, Unit4. Right, I've got a few slides of introduction, so I'll take you through very quickly because of time. We all know what the traditional planning looked like. You enter value, what the budgeting model looked like, and you have your return on asset, EBIT, financial statement. Everything was looking backwards, looking at last year plus 5% or whatever it was. We then brought in driver-based model, where it is mathematically linked to a few drivers that once you put it in there and you have your input, will give you mathematically derived return on asset, EBIT, etc. We then move on to the next step, which is we have drivers that have been generated through the business, but then we start to have drivers that are generated by statistical trends, machine learning algorithm, AI, that shed a completely different light onto our way of doing our planning. And you can see here how it has evolved over the last few years. So traditional budgeting and planning, which was last year plus, then you have partially driver-based planning. Again, part of the P&L is driver-based. Then you have fully driver-based planning. But even then, in fully driver-based planning, you don't have three-way driver-based planning, which is driver-based planning where all the drivers affect your P&L, your balance sheet, and your cash flow at the same time. They're all linked. So in fully driver-based planning, this is what you find. And then finally, you go on to the next extent where you start the introduction of digital, so predictive, prescriptive, machine learning. And you will see it very nicely on this model here, which is our predictive planning maturity model. I will ask you to spend some time and look at it. Look at what the leading organization in stage 5 or state 5 there, fully integrated, are doing, where they have user-defined and machine learning defined drivers. The values are all linked to the detailed plan. The plans are linked to operational plan, business plan, strategic plan. So please spend some time and have a look at it. And today our speakers will take us through most of these elements within their presentation. So moving on swiftly, it is now a good time for me to introduce our first case study for today, which will be shared with us by Michael Nudelman, who is Director Controlling Head of Corporate FP&A at Swarovski, and he will take us through how he does driver-based planning. So Michael, if you would like to join us on the webcam and go through your presentation, I will disappear. Take it away when you're ready.
Thank you, Hans. And yes, hello everyone again. I will take you today through, first of all, through a short introduction about Swarovski, who is Swarovski, and then I will share with you our journey, how we went from classical towards driver-based and predictive planning. So let's move on and deep dive directly into who is Swarovski. So Swarovski is a group, and this group consists today out of 3 main holdings. And the first one is Tyrolead, which is producing grinding and cutting techniques, so it's more an industry player. The second group is Swarovski Optic, which you might know from binoculars or rifle scopes, is a brand which is a competitor of Carl Zeiss. And the third brand or group which you know, or where you usually know Swarovski for, that's the Swarovski crystal business, and this is what I will be talking today about. It's a business doing about 1.7 to 2 billion annual turnover. I will give you a glimpse of how our new stores look like so that you can recognize us on the next slides. I hope, yeah, this is the first one. So this and the next slide are showing the store in Milan, and then there's also a store in Paris that we can see in a second. So all of that, this is part of our new branding and our new strategy, and most of you probably have already the chance to see these new stores in your main streets of your towns where you're located. Good, but let's focus now on our driver-based planning journey, where we come from and where are we today. So we are coming from a very classical quarterly forecasting, where we have been forecasting always year to end. Every location has been doing it heterogeneously. It was fully bottom up, and the planning was done basically store by store, where this was then aggregated to come to a final Swarovski crystal business picture. Today, we are having a monthly forecast that generates much more agility. We are having a 2 years rolling forecast horizon, where we focus not only on the short term, but also on the midterm. And I think the most important, we have one driver model where we do the same things equally globally. And on top of that, we are also utilizing predictive technologies to create a trend line, unbiased, and all that leads to way less manual effort. And on top of that, of course, much more business insights and understanding. And last but not least, of course, this new setup allows to plan on a more aggregated level and then receive the results on the details, for example, the store level, which again reduces effort, increases simplicity of the process, and on the other hand side creates more insights. Good. So let's go to the next slide and see how this all works as a process. So as a process, we defined that first of all, we work with a predictive model. So we let a statistical model create the trend. This is the basis for everything. Then the central teams are working on central drivers, and afterwards the local teams are adjusting local drivers. All that result in a driver model that produces a result, for example, a net sales or a P&L, and most of the time in the process is actually spent in the fifth pillar. So the first four pillars are actually run through quite quickly, doesn't take a lot of time, but the most insightful and also interesting area is the fifth pillar, where we do the analysis and the adjustments. So we review the results, we adjust them, we analyze them, we create the business side insights, but we also have walk the talk directly all in one. So this is how we understand the new process. Let's move to the next slide, please. And then we will talk about, yes, about the platform. So of course, as you understand, creating such a process heavily relies on a platform, and what we implemented is, we call it the so-called one-stop shop for sales and financial planning. We implemented one single platform where all the components that we need in planning come together. So the trends, the drivers, also of course the data that is needed for that, because everything is data driven, and of course dashboards and reports to finally evaluate the results and present them. And let's move on and see how we did it. So here what you see is our driver tree. This is the full P&L. I mean, nothing I would say surprisingly in the left first two columns. This is a classical P&L, how it comes together from the EBIT. But after that, you see that we have a net sales number, and behind each and every box, there is a huge tree behind each of them. And we will today deep dive into this net sales block. So the net sales tree, as you say, it just appeared now. This is the composition of the drivers. So the net sales are, first of all, created by the first driver, which is the trend. Here we have a time series model. Then it's complemented by a portfolio mix driver set, which focuses on the unit evolution. So which products are we going to launch? How are the products changing from previous year to this year? On the discounting and pricing changes, which results then in the average selling prices. Another important driver set are the communication investments and the return on investment. So how much more effective are we this year in comparison to previous year? How much more additional incremental net sales are we generating with our communication activities? And the next two boxes are about our distribution footprint. So here it's about, are we refurbishing our shops, and how much is this refurbishment uplift generating in terms of net sales? Are we opening or closing the shops? So the net expansion, all that is covered in that drivers. And last but not least, we have a certain driver set or a certain area where we can plan initiatives, so additional special initiatives which are not covered by the standard drivers. Good, and with that, I would move to the next slide, which will conclude on the message, which is my main conclusion why driver-based planning matters for FP&A. And the message is that we think that it generates exponentially more insights with significantly lower time, effort, investment during the operation of the process. So it's a certain min-max principle, and that's why we follow it. And we are very happy about it as well. And with that, I hand over to Hans.
Michael, thank you very much. Great presentation. I think we saw what a truly integrated driver-based planning looks like, and you taking us through that model and sharing with us, you know, the sort of full P&L. Of course, we don't have time to go through that, and it looked complicated and heavy, and I do apologize to everyone. But of course, we looked at just the net sales, the drivers, and everything else in there. And then you concluding with, you know, of course, exponentially more insights with significantly lower time, so that people can move on to do the value added stuff. So that's just fantastic. So thank you for that, Michael. Good time for us to look at what our audiences are doing in their driver-based planning arena. So guys, I would invite you to vote. How would you describe your current planning process? Static with no drivers, some drivers are used, fully driver-based, but not three-way modeling, so only P&L, and finally, three-way driver-based modeling is being used in your organization. So if you can vote, please. How does your planning process look like? Is it static? It doesn't have any drivers at all. Second, it has some drivers. Third, it is fully driver-based planning, but we just look at P&L. And fourth, it is three-way fully driver-based planning. If you can vote, please, I'll give it another 5 seconds or so. So is it static, no drivers, some drivers are used, fully driver-based, but only for P&L, and then finally, three-way driver-based planning model. So it affects P&L, balance sheet, and cash flow. And I will now close it and share it with our panelists. So 18% have said they don't do any driver-based planning at all. They're very static. 53% use some drivers, 23% use fully driver-based planning, but just for P&L. And only 8% use it for P&L, balance sheet, cash flow. Michael, any comments from you?
Yeah, it's definitely not surprising. I think this is reflects very much where most of the practice is today, right? I think many companies are using driver-based planning, or most of the companies are already using it, while having it fully scaled up towards a three-way driver-based planning is definitely a long journey. And this I can also confirm for Swarovski. Our journey is also not yet accomplished, and it will take for surely another 1 or 2 years. So definitely it shows that we are well on the way, but there is also a way to go.
Absolutely, more than 80% are using driver-based planning, and then when you look at it, it's 32% are fully driver-based planning, which is really exciting. So it's moving that 53% into the other elements. So fantastic. Thank you, Michael. Let me just hide that now and let us look at the question you have for the other panelists. I would at this point ask the other panelists to join us, please, as well. So the question that Michael would like to ask the other panelists and myself is, what comes after driver-based planning? Let us start by asking Rudy first. Rudy, what will your answer be to this question?
Yeah, I think what will happen is that most companies will build up experience with using the existing driver-based approach, while gradually venture into using artificial intelligence and machine learning, and I think that's the path which will come.
Fantastic. Ronald, what will your answer be?
Yep. What Michael said is a must for outstanding organization who wants to innovate in finance. Everyone wants to have a P&L with a granularity, with all the drill down, because it offers you a unique opportunity to open your mind, to communicate new insights, and also to understand better your organization through the details. Congratulations, Michael.
Fantastic, thank you. And finally, Michael Lengenfelder?
I would go with strategic FP&A, Hans. I will also talk about this point during my presentation, because I think it's essential that we link the strategic component, the strategic FP&A, with the driver-based planning. So I would not only say that it comes after and before, because for me it's kind of a circle with interconnections in both directions. So it comes before and after.
Fantastic. Thank you for your answer. I mean, if I may just add there, I think for me, yes, we talk about what comes after driver-based planning. Thank you for that. But I think for me, the key thing is three-way driver-based planning is very, very important. We need to be able to achieve that because, you know, we can't just look at P&L. We need to look at the balance sheet and the cash flow at the same time. And the drivers need to be affecting all of that. So to your point there, Michael Lengenfelder, yes, integrated with strategy and everything else works along the same sort of line. So thank you very much, all of you. Michael Noodleman, thank you very much for your presentation and your insight. I know we were going to lose you shortly. Have a safe trip, and then we'll see you soon. So guys, if you turn your webcam off, let's move to our next session, which is on stakeholder management. And to deliver that, we have Rudy. Bear with me a second. There we go. So to deliver that, we have Rudy van Dijk, who's Global FP&A Director at Tip Trailer Services. He will talk to us about how you link stakeholder management to driver-based planning. Rudy, over to you whenever you're ready.
Yeah, thank you very much. Excited to get my viewpoints across to the people. I'll tell a little bit about what my company is about, then what so a couple of slides about having the basics right, the tools you need. Well, I go into a little bit more depth on what kind of stakeholders we are dealing with and how we then try to link strategic planning to operational planning. If I start with first about the company, Tip Trailer Services is a company who is delivering business to business on leasing, rental, and maintaining truck trailers and trucks. And these are 110,000 truck trailers and trucks which we own, and 60,000 for third parties. We do that in 18 countries across Europe and Canada, and we have annual revenues of 1 billion. Just important to know that in the last 5 years, we doubled revenue. So 5 years ago, we were at 500 million. If we then go to the next page and looking at when you go talk about stakeholders' involvement, you first need to obviously have the basics right. So in my company, in TIP, we have now for the FP&A team a roadmap created for finance digitization, trying to align that with the business who's trying to improve processes via a program we called One Tip. It's around standardization, data management. It needs change management and an operational planning transition. And you can see kind of in the picture that we have many areas where we want to go to leading FP&A. Now, and to do that, if you go to the tools you will need, which is in the next slide. Yeah, if you're going to do it, you will have to have the IT capabilities to really support that and to support a target operating model, which is around things like having a data warehouse, a cloud-based tools, a reporting tool, a planning tool, an ERP. And when you look at that, at each of these phases, yeah, it plays a role. And you can see at the bottom of the picture, driver-based analysis is one of these elements, and which I will want to get across a bit with what stakeholders we're using. If we're looking at the stakeholders in the next page, we have different ones. We have been acquired by a private equity firm in 2018, but we have been in the past part of a conglomerate, General Electric, and been sold in 2013 to a Chinese conglomerate, when in 2018 by a private equity shareholder. That means that we have to adhere to the dividend needs they have, a constant dividend over the years, a return on equity, and also a exit scenario that determines how we have to plan and what is also the main focus points we have. As we are a leasing company and the trailers, the fleet is the main component of our balance sheet, it's offset by different ways of borrowings. We have a revolving credit facility, a term loan facility, a securitization setup, finance lease-ins and operational lease-ins with IFRS 16 implications, either set up by ourselves or receive that via acquisitions we have done in the last couple of years. Important then how we are managing the covenants sections in like solvency, interest rate cover, which in current circumstances, luckily enough, as we are in a logistical area, it's mainly more on solvency than on interest cover and finding alternative financing. Besides those stakeholders, which are more external, you have the internal stakeholders, also historically driven by target setting with regions and also to achieve profitable growth. Return on invested capital or revenue growth are some of these key elements in it. If you look at the where driver-based planning fits in, you have the strategic plan, and in the picture you see at the bottom, what is the target setting? Then you have really with the operational financial plans where driver-based planning comes across to feed the budget, and out of that a rolling forecast and reporting. If this is nice and good with the stakeholders, but if you're now going to make that really connection between strategic planning and operational planning, this is where you're going to use drivers, and which you can see in the next page, where we're trying to determine a financial, we have a finance data model dimensions. While we are on that digitization roadmap, we have added new dimensions or will add new dimensions, which is about product, it's about projects, it's about also the with products when we have leasing and rental, but also maintenance for third, but also new products. We are venturing into telematics, which we call Tip Insight. Now, these are growth areas where you need different type of dimensions in that, different type of drivers in it. What is critical with that is that it's clear who's the owner of the data inputs and the consolidation, either partially in the headquarters or regional or functional. And what I mean with that, if we are going to invest in assets, we have an investment budget of 500 million euros per year, mainly investing in fleet and in trucks and trailers across the globe. Knowing when to deliver, delivery dates on it, with the current circumstances where there's a shortage of parts and shortage of capacity, delivery dates keep constantly changing. Having good that balancing between what is in the headquarters and regional is important. We are using historical drivers, yes, utilization and price, which we are used to in the last 20 years, but also we're going now introducing new drivers as for predicting forecasting based upon delivery dates, for example. Now, and especially that area is a very big learning for the whole organization, which often in our case, many regions are used to plan based upon experience and not so much on data, and we're turning into using more of the data. In the strategic plan, that also determines a prioritization of drivers. Is CapEx more important to grow for revenue in the future, or is dividend more important? How do we balancing that? It has impact on solvency. If I invest a lot in CapEx, there's negative impact short-term on solvency, long-term positive. Dividends will have, if I want to pay out dividends required by the stakeholder, by our invested Square Capital, is that then more important, which limits a little bit of the ability to grow CapEx. Then the last piece of it, which I call more the people-related piece, is the people change. Of course, if you're changing to driver-based and more in using tools, also the way you plan and the way you deal with data will be different and requires a different skill sets. If you have then also a generation change in our company, we have quite a lot of people who have been with the business for 20, 30 years, and some of that generation is now retiring and gets replaced by people from outside with different ideas and different approaches. And then finally, stakeholder changes. As I said, we are part of a private equity investment firm. They eventually will sell us, so we will have a different owner. And what does that mean for the drivers you use. And the same when we grow, the type of financing will move to different type of financing, more related to big size companies, where also changes will be. If you do all of that, what it will lead to is that we will use the data science analytical techniques to improve and further use for business decision making the data-driven planning. The main thing, I think, if I want to conclude on this, is that yeah, stakeholder, it's very important that you understand the stakeholders and that you also make sure you connect that with how you're setting up and using the drivers. And with that, I would like to turn back to give the lead back to Hans and go to the next phase.
Rudy, thank you very much. A great presentation, especially looking at how to link everything. And of course, it's not just about, you know, looking at your P&L, but also looking at what are the other key metrics that you're working with. What does your stakeholder look for, etc. And there's a lot of few points here which have come out in your conclusion as well that we will look at shortly. But let us very quickly look at what our audiences are doing in that sort of arena. So if I may ask you to vote on how are the drivers in your organization determined and prioritized? Is it strategically determined? So is it coming from the top first? Second, is it through the data, mining the data? So using machine learning, but also using your own understanding. Third, historic reasons. This is how we always used to do it. This is how we're going to do it. Is it pushed by regions, division, bottom up? So is that the fourth answer? Or finally, is it external factors, market, economy, etc.? So how do you determine your organization's drivers and prioritize them? First, strategically. Second, through data. Third, historic reasons. Fourth, push by regions and division, bottom up. And finally, external factors. If you can vote, please, that'll be great. We have, we'll give it another 5 seconds, and I am now going to close the vote and now going to share the answer with our panelists. So 51% voted strategically, 11% through data, 11% historic, 14% push by region, and 11% external factors. Rudy, a quick comment from you on this, please.
Yeah, I find it a bit surprising, to be honest, because I think strategically determined, I would like to see in practice often, I see with many companies that, yeah, I had expected a little bit more historical reasons in it, which is good to see how you, where you want to go to. And yeah, I think this is kind of also a little bit what I'm saying is, yeah, you change your drivers in line with what your main stakeholders want to achieve.
Absolutely spot on. I think the fact that strategically determined as well means it's forever changing and moving with where your strategy is going, which is fantastic. Let us now hide this and let us look at your question to the other panelists. So Michael and Ronald, if you can join us. Is driver-based planning more pushed by external or more by internal stakeholders within your organization and your experience? Michael, if I may start with yourself. Ronald, please join us as well. Michael?
I would, in this case, clearly go for internal. So, you know, the drivers should be about the clear focus topics for the organization. So there should be an awareness amongst the management team, from top management to middle management, what the true drivers are in the organization. So there should be a natural intrinsic motivation to work with those value drivers from the management. And so I would clearly go with internal on this one.
Fantastic, thank you. And Ronald, your answer, please.
Yes, I'm totally agree with Michael. Also here in Latin America is the same. I suppose that in Europe maybe it's a trend. Here in the internal stakeholder push, many drivers, but in connection with external also.
Oh, absolutely spot on there, Ronald. Of course, at the end of the day, especially if you're a listed company, you've got the city and all that to deal with. So you've got to tie it back to the external as well as, everything comes from internal and then goes into external. So guys, thank you very much for your answer there. Let us now swiftly move on to our next session, which will be on mindset change. And to deliver that, we've got Ronald Human Hilaria, who is Regional Head of Financial Controlling at Minsa. And today you will take us through how you'd had to change mindset, etc., for better driver-based planning. So over to you when you're ready, Ronald.
Thank you, Hans, for introduction. Hello, everyone. As a Regional Head of Financial Controlling in Minsa, I would like to share with you our successful experience in changing mindsets in order to improve our planners, because we are working in an unstable environment, right? Okay, first, we did an assessment when COVID-19 hits in 2020, and I'm sure that it could help you, okay? Because maybe today we are living in an environment that's a little dark, but we did an assessment trying to evaluate the skill set that our FP&A team should have. First, we evaluated hard skills like in accounting, controlling, statistics, IT tools, tax, and corporate finance, but also we evaluated skills or mindset related with curiosity, strategic thinking, and communication. We believe that this is the minimum skill set and mindset, okay, to improve how we plan in our organization in an unstable environment. Next, please. After our in-house training with all the FP&A team, we did a survey and we received feedback to answer this question. What is the most relevant mindset for FP&A teams in an unstable environment? They think that 50% selected strategic thinking, 30% curiosity, 20% communication. Okay, but why strategic thinking matters? First, don't reduce key KPIs when things get worse at the first moment. Okay, because here, for example, in our region, when COVID-19 hits the mining industry, many companies reduce his KPIs in the first moment, but we didn't. But why? Because when you reduce expectation in the beginning, it will be more easy to give a feeling inside the organization. Instead of doing that, we decide to be flexible about how can we reach differently our KPIs. We maintain the KPIs to promote new action. And also, curiosity, okay? In this part, first, we decided to increase the level up, the hungry for learning about the organization, about the company of our FP&A team. But when you do that, it's necessary to fix them with problems, okay? And in this part, we transform this unstable moment into a unique experience to learn as much as we can, okay? Also, we implemented meetings every day to analyze data. We implemented pre-mortem and post-mortem meetings every 2 weeks to capture lesson learned in order to find insight that move the organization in the right direction, okay? And the third one, communication. Here we have a rule, okay? The 3 C's golden rule, that is create clear communication. To be brutally honest with your team is vital in that kind of environment, okay? Yes, maybe we made mistake when we did weekly projections, but instead of hiding responsibility, we prefer to make apologies and provide alternative, okay? And also, it's very important to make alliance with partners inside the organization. For example, if you want to avoid notifications or surprises from your accounting team, relation with impairment losses at the end of the year, why not now organize meetings to anticipate this kind of potential impacts during the first quarters? This is just an example. You can translate this practice around the organization. And the last one is storytelling. Okay, when the environment gets dark, it's more complicated to convince the top management because naturally they become more conservative. Okay, but you can use storytelling as a technique to improve the way you sell your recommendation in FP&A. For example, a trend that we have identified is our competitor close its plans. We believe that this happened because the lockdown provided by the government, and that offered as an opportunity to improve the relation with potential customers. Okay, in simple, what, why, what will happen? What, why, what will happen? And also, it can help you, definitely. The next one. Here we have 4 mental muscles to boost strategies with your FP&A team. First, understanding the overview. Okay, in this part, it's necessary to work in a flat management structure. My friends, vertical organization works for decision making, but not for sharing insights, not for sharing stories, not for sharing ideas. Okay. 2, exploring key trends. It happens better when you use the art of providing insightful questions when your team. What would you do in my position? What kind of problems we are not? What kind of question we are not making? Well, we have many insightful questions in order to find the right insight in the right moments. Okay, and that's the third one. Break down assumptions. It happens better when you have someone in your FP&A team who have the courage to raise his hand against what the majority think. Okay, and therefore, if you do the right thing from number 1 to number 3, you will really anticipate opportunities and trust in an unstable environment. Okay, maybe everybody said it's necessary link operational planning to strategic planning, link to strategic planning to value drivers, but also it's necessary link value drivers to strategic thinking, because now it's mandatory to be flexible about how can we reach the objective differently during all the process with strategic thinking. Use it. And the next one, as Charles Darwin said, it is not the strongest of the species that survive, nor the most intelligent that survive. It is the one that is most adaptable to change. Okay, this is value, my friends, because more than be intelligent or stronger, now is to be more flexible with the way you think, with the way your skills, your mindset, in order to reach your objective. Driver-based planning exists because the organization wants to have success. And success, you define what is success for you. Increase the value, protect your value. And now, to finalize this part, in our organization, and now we don't want to change another catastrophic event to act. Okay, we work 24 hours with sense of urgency. Thank you so much.
Fantastic, Ronald. Great presentation. Thank you for taking us through, what you went through, especially in the COVID, and how, you had to shift the mindset from much more technical accounting to very much the softer skills in terms of curiosity, and also sharing with us how we have to be adaptable in those times. So let us now look at what our members are doing in terms of within their organization. What skills do they think are imperative in FP&A for driver-based planning? Is it accounting or controlling? Is it technological skills? Is it leadership skills? Is it softer skills, or is it business acumen? So, ladies and gentlemen, if you can vote, please. What skills do you believe is imperative for better driver-based planning? Accounting and controlling, technological skills, leadership skills, softer skills, or business acumen? If you can vote, please. First, accounting skills. Second, technological skills. Third, leadership skills. Softer skills is fourth. And finally, business acumen. I'll give it another 5-10 seconds and I will be closing the vote. So I'm now closing and sharing the results with our panelists. So 10% say accounting and controlling is very important, 5% technological, 13% leadership, 3% software, and 70% business acumen. Ronald, a quick insight from you on this polling question?
Yes, because business acumen is a basement, is a knowledge, is this intangible asset, that we need to think differently. Everything is connected finally. Okay, when you have a good platform, a good process, a good business acumen, probably you will have more opportunity to reinforce your leadership skills, the way you think, the way you speak, and that's it. But that's what I expected.
Yeah, no, absolutely. I fully agree with you there. That business acumen is one of the key ones. So let us now move on to our question from you to the panelists. So panelists, if you can join us. So in which area have you had to reskill FP&A for better driver-based planning, do you think, within your organization or your experience? So Rudy, if I can come to you, what will your answer be?
Now, I think it's especially a bit of the technical skills. We in the last 2 years we implemented a new tool, not only learning the tool, but how to feed the beast, as I say it. How do you use the data which is across the organization, and how do you use the different sources from that? Do you understand the other tools used within the organization, so you can better feed also the drivers?
Fantastic, great answer there. And Michael?
I actually liked all the points, also from the possible answers from the previous point. So I would go on this question with collaboration, because I think in today's world, to come up with the best solutions, you need the business expertise, the experience from people, you need the technology people, and you need the finance background to convert all this logic into meaningful outputs into a P&L, for example. So I think the collaboration part is key to bring all those people together to work efficiently with each other.
Yeah, no, absolutely spot on. It's about understanding the business, but also then it's about how do you bring everything together. So fantastic insight there, panelists. Thank you very much for that. Let us now quickly move on to our next session, which is on technology. And to do that, we've got Michael. So if you guys would switch off your webcam and let Michael take it away from us. So Michael, whenever you're ready.
Thanks a lot, Hans. Well, let's have a look at how technology can actually support us in the value driver based planning. My starting point would be that strategic FP&A should be the starting point, because the whole budgeting process starts exactly here. Quick summary, what do I mean by strategic FP&A? Well, first step is we define vision, mission, and the core values. But then we quickly translate them into actual goals, objectives, and we define KPIs. Now, why do I stress KPIs here a lot? Because the strategic objectives and those KPIs, what does KPI stand for? Key performance indicator. They should be focusing on the true value drivers of the business. So for me, the topics of strategic objectives with their KPIs, with the true value drivers, it's just a perfect match that belongs together. If we zoom into a little bit more of the details with maybe 1 or 2 examples on the next slide, you see as the first step, and this is an example from a software company, we defined an objective that we want to put a priority on cloud growth. Well, then we've defined 2 KPIs at the bottom for our recurring cloud revenues and the churn rate of our cloud customers. Those are very high level objectives that we set in the first place. And this is very important because this is ultimately the starting point then for our planning. If we move on to the next step, of course, we want over time to keep track on our objectives, our KPIs. How do they develop? How are we performing? And also the commenting on those. Why are we over or underperforming here? And the last step that's definitely worth mentioning, what we see in practice more and more, is on the next slide, that the sustainability has more and more importance in this strategic process. So we see more and more companies who look at the United Nations sustainability goals, and they actually put a priority how they as an organization can contribute to those sustainability goals. Now, the next step, after we've set those high-level KPIs as part of our strategic process, we actually get into the planning. And as we've heard before, that's the Champions League, if you like, the fully integrated financial planning that you see here on the screen. The darker gray boxes here refer to our core pillars of every FP&A model, the P&L, profit and loss statement, balance sheet, and cash flow. But then in the white boxes, you see different areas or sub-plans that are important and make up basically our P&L and will have an influence on balance sheet and cash flow. Now, depending on the specific organization, different sub-plans or areas of planning will be the most important ones, the true value drivers for the organization. I think most companies would agree that the top one, the sales planning, is of key interest. How you convert from marketing investment, your sales funnel into final sales, what are the conversion metrics between that? But when you think about an asset-intense organization, maybe the investment plan to the right will be the most important one, because this is the true value driver of your business. Or last example, if you're coming from a people-centric organization, maybe the workforce planning is your key cost and revenue driver, and you would like to put the biggest focus on there. In the next section, I would like to go into the two most important applications of value drivers, in my opinion, and that's number one, using them for data entry, and the second one, to better visualize KPIs. My first example here comes from the consulting business. And what you see basically here, or what I want to focus on, is the second section where we plan our revenues for a consulting team. The second row brings in HR data of FTEs from a source system, HR system or ERP system, our starting point. So we're fully integrated here with surrounding systems. And then in the gray areas, the consulting team leads will enter if they plan to add additional team members to their team. What will be the costs? Later down, we will take care of absences, how many working hours do we actually have? And then you have one of the key drivers for a consulting business, which is the utilization rate. And in this example, of course, with the addition of new team members, we see a slight dip in the utilization rate. Last step, we enter the hourly rates on average for our team, and the system calculates the revenues. Now, what you see on the screen, and you also heard in my explanation, this was business planning. I didn't mention a single account, and you won't find an account number on the screen. Business planning to me is a very intuitive form using terms that the actual teams would talk about and use in any conversation. And the planning form should be easy and intuitive for them. Yeah, and last but not least, I mentioned before, it's very important in this value driver planning that you use your surrounding systems to feed as much information into such a planning form automatically. The next example comes from the higher education sector, and there it's about planning students, for example, split here in domestic and foreign. Why is this a key driver? Well, because we can charge different tuition fees based on that. Again, in the background, in the system, this should be then pushed into your P&L automatically into the right accounts. But this is at this point for the business planner irrelevant. And the last example is actually about a simple investment planning. So with the simple investment planning, you of course enter your individual investments, and they will flow into the next step into your asset schedule. Why do I say that investment planning is an example of value drivers, which we see on the next screen? Well, again, it really depends on the industry and the organization. Think about a regulated utility company where maybe their revenues are based on their regulated asset base, so the residual value of their assets. And they, by nature, will have very long planning cycles. So of course, such an organization will have a key focus on how they invest money and make sure that they're covered from the financing side to take those investments. Let's switch now to the second main use case that I had mentioned before, where we see in actual value driver trees a visualization to better understand how the value driver is actually made up. You see in this example a return on investment form you could actually use for entering data in the white cells, and in two different use cases of best case, worst case, you will see what the return on investment for such a project or initiative would be. Or you could use it, as in the next example, to show how you actually calculate relatively complicated KPIs in finance, like here, the economic value added. And the point that I want to stress here, the more people really understand such a KPI, what influences this KPI, the better it will be for people to understand and join in pushing to achieve those KPIs. And the last example is on the equity ratio. Again, another visualization, but I think you get the picture. Now on the next one, summing up basically, I want to stress again this very strong link between the KPIs on the left side and the strategic planning to the right side. To the left, ideally you would have, for your actuals, forecast and plan periods, you would have all the overview of your KPIs, be it HR, assets, balance sheet, P&L, always updated, so that you can always directly jump between what was my strategic goal for a certain KPI and what's the latest forecast showing. Well, how could I talk about technology with value drivers and not mention AI? I would even make the point that AI is the new value driver planning. In my example here, I picked sales planning as one of the sub-plans that we want to plan with AI technology. In the modern cloud world, of course, we would use APIs for exchanging the data. But the point is that many organizations we see now start using in parallel, based historically coming from the logic-driven value driver side, that they now, in addition to the AI side, where they compare their two scenarios of classic logic value driver planning versus AI. Well, and last step would be to actually sum it all up. I think the key point is really for value drivers to define what's the most important areas for you as an organization to steer the company. Then decide on the approach. Is it the good old proven logic-driven value driver approach versus AI, or do you want to have both in your system? Then set up the model of the value drivers and make sure that the business experts who know the business are involved. Monitor the value drivers' accuracy over time. This is very important because there will be changes coming up and you need to make sure to adapt your models. I think that's a true requirement you need to be ready for. And I stressed that point several times, to link the value drivers with the strategy planning. And finally, a strong recommendation from my side to really make use of today's FP&A software for all those topics, because they can really make your life as an FP&A team much easier. And with that, back to you, Hans.
Michael, thank you very much. Great presentation. And of course, lots and lots of different examples there as to how technology are helping us in different industry, different businesses, and linking, strategy to business plan, to operation plan, and how the drivers flow from one to the other. So thank you very much for that. Before we move on to ask our audience about what sort of tools they're using, can I remind our audience, please keep sending your questions. We've got lots of exciting questions and a great exciting Q&A session coming shortly. Please keep sending them even until the end. Whatever we can't answer today, we will answer to you via email. So let me now switch and ask you guys as to what modern collaborative technology, and we're not talking about Excel here, for FP&A driver-based planning are you guys using? Yes, we do. No, we do not. But plan to implement in the next 12 months? No, we do not. But then probably will implement in 2 to 3 years' time. Or finally, on the fourth one there, no, we do not have any technology, and there is absolutely no plans to think about implementing. So do you currently use modern collaborative technology for FP&A driver-based planning? Yes, we do. No, we do not, but we'll implement in the next 12 months. No, we do not, but we'll implement in 2 to 3 years' time, so longer term. And finally, no, we don't, and we will not be implementing anything on the radar so far. I'll give it another few seconds for you to vote, and then I will be closing it shortly. So first, yes, we do. No, we do not, but we'll implement in 12 months. No, we do not, we'll implement in 2 to 3 years' time. And finally, no, there's no plans for implementation. I'm now going to close this and I'm going to share it with our panelists. So 38% said yes, they do, which is fantastic. 21% say they will implement in the next 12 months, 26% in the longer term, 2 to 3 years, and 15% are not using anything, will not use anything. There's no plan. Michael, can I ask you for a quick comment on this, please, Michael?
Sure. To be honest, not a big surprise, Hans. It's a true statement that there's a lot more work to do, because the 21 and 26%, we need to take care of and make sure that they have a successful start into the FP&A world. And also the 15% are definitely a target in that sense, to keep with sessions like this, show what's possible with modern technology to really support them.
Absolutely, spot on there. 38% are currently using it. I think we've seen so much benefit in using driver-based planning. And again, with the Russia and Ukraine war, another black swan. We were talking about COVID. COVID is still around. The amount of time and effort that we save using driver-based planning in itself is a massive thing. So thank you very much for that, Michael. Let us hide that and let us now ask the question that you have for the audience. So what technologies do you use for better driver-based planning within your organization? So if Rudy and Ronald can come on the camera and help us with this question. So Rudy, what sort of different technologies do you guys use?
Now, I think, as I said, our company grew, doubled in size in the last 5 years. So from a background where we were part of a global conglomerate, we were investing in the past already in large CRM tools and for HR tools. But especially in the finance area, the last 1-2 years, we have invested a lot in cloud-based tools, and will invest more. Also catering for the fact that remote working, which was already partially embedded in our organization, is now the norm, and is also giving the ability, as we expand also around the globe, to have access from all parts of the globe.
Fantastic. Thank you very much for that. Ronald, what about yourself?
Well, in our organization, we have to deal with teams from different countries, Brazil, Chile, Peru. And now we are using SAP and Power BI, but we are looking for an upgrade of our technology. We are evaluating several alternatives, but as Michael said, it's necessary to ensure the connection with the next new platform with what we have now. Maybe one mistake that we did last year was focusing just on the cost. What's the cost? What is the cost? what is the cost. But the right question is what kind of value we can bring with that kind of investment for the future. Because now it's necessary, if you want to have an agile FPI team, is reducing the time, reducing the quantity of emails, and also it's necessary to reduce the risk, because when you have Excel, probably you will have, you increase the risk of mistake, the risk of fraud also. And well, that's it, Hans.
Absolutely spot on there. It really doesn't matter about tool, what tool it is. You know, most of the tools are doing all of the bits that Michael shared with us there. It's much more about adoption. Absolutely. Michael, anything you would like to add about cloud here? I think that's quite important as well, isn't it?
Yes, in so many ways. The collaboration part with the cloud was key, also what we have seen lately. And to be honest, there's more and more customers joining it, be it the dependency on local IT teams in the pandemic, or just the collaboration part. So I think that the cloud journey, that's a little independent of just driver-based planning, but in general for the whole FP&A area, I think this journey will continue.
Fantastic. Thank you very much, guys, for this. We'll now move on to our key takeaways, but just quickly before we move on, thank you to all the people who participated in all the different polls. Please, members of the FP&A club, please keep sending your questions. We've got an exciting Q&A session coming after this. We will attempt to answer some of them. We won't have time to answer all of them today, so keep them coming. The ones that we don't answer, we will take it on email and answer it directly to yourself. So please keep sending them. Please tell us who you want them to answer those questions as well. So great point now to do some conclusions. And you can see in front of us, we've got great conclusion from all 4 panelists. And I will share the 2 conclusions that came from Michael Noodleman based on his case study. But of course, you know, just generally talking about the benefits they've seen by using driver-based planning. So the first one from his angle was exponentially better insight. So the insight you get from the drivers by using driver-based planning is just absolutely incredible. You wouldn't have got that if you were just doing a normal planning process. And not just that, it also helps you free time, and for that free time you are doing value-added stuff. So those were his 2 key conclusions. So can I now move on to Rudy yourself? What is your conclusion? Would you like to share with us?
Yeah, I think what you can see in the changing world and also with changing stakeholders, you always have to relook at your drivers and what your key drivers are you want to focus on. It depends on by company, in which stage are you as a company and in what markets you operate. And it's key that you take that into account and not in your planning process.
Fantastic. So understanding your stakeholder, of course, you talked about your stakeholder management there and all the different KPIs, but revisiting your KPIs constantly is the key thing. So thank you very much for that. Ronald, take us through your conclusion points, please.
Yeah, connecting con Michael and Rudy, the more quality of information you have, you will be more stable. You will reduce also the anxiety of your people, and also you will have an opportunity to think differently about you can reach your KPIs differently. Okay, be flexible in any moment, and also now in that time, be empathic.
Absolutely. Absolutely. Thank you very much. And Michael, your conclusion points?
Yeah, the first one will be accessibility. That was the point about the business planning versus financial planning. Make it easy for the business users to use the value drivers. It should be their natural language that's used. It should be very intuitive to use those planning forms. And focus on what matters the most as an organization. Well, in the planning, you can invest time in any area, right? But really know what is driving your business and then focus on those areas to really get the business logic or the AI right for your planning purposes.
Fantastic. Thank you very much, guys, for the concluding points there. Ladies and gentlemen, we have an exciting session of Q&A coming up next, so please stay with us. Keep sending your questions. We will answer some of them right now. The rest of them, of course, is going to come via email. So let me take you guys through the Q&A session. And our first question is to yourself, Rudy. You took us through continuously reviewing your drivers as they evolve. How do you do that within your organization? What is the process? How often, etc.? Can you elaborate a little bit, please?
When we go to a budget process, it's almost like when a budget process is ended, the new one starts. And during that process, you have learned from concluding also in the interaction with the stakeholder, which is mainly the shareholder in our case, on with the plans they approved from prior year, they're already kind of asking for the next stage and the next step. So of course we do a 5-year planning, but in that interaction you find out already where there's a shift, a potential shift in focus, and that means it's already the input for the next budget session to say, hey, maybe we need to focus a little bit more on this driver instead of on another one.
Fantastic, great answer there. And of course, you also use the 80-20% rule all the time, because some of the drivers are less important, and then new drivers come up. Whilst you're reviewing, you drop some, you bring the others online. So great one there. Thank you, Rudy. Ronald, the next question is to you. What skill set did you find hard to either recruit or train during the pandemic or during the time of uncertainty that would have helped the team move forward, with driver place planning, better planning? So what skill set is the hardest?
Strategic thinking, because maybe some ingredients is not depend about us, it's also depend about the organization, about the culture of the organization. When you have an organization that have a vertical culture, it's not maybe you don't have an environment to share inside story with your friends, what next happen. But before the number, before digital innovation, we have to deal with or improve culture inside the organization, but it depends about the leaders also. The leaders are the people who provide the guidelines, provide the north, the stars that everyone want to reach in that environment.
So what I'm hearing here is culture is very, very important, and it has to come from the top, cascaded all the way down. And to your point, you talked about the 3 C's early on, so very, very important there. So thank you very much for that. Question number 3 to Michael. Michael, I talked about 3-way planning. I talked about 3-way driver-based planning. How do you see the effort benefit balance from moving to a fully 3-way model? In other words, is it worth it? And this is a question that I will come in and answer as well. What is your point of view? First of all, how do we go about implementing a 3-way driver-based planning? And then, is it worth the effort, is the question.
Well, I think what you would want to see is experience from the vendor. So for the FP&A tool, I would definitely look for pre-configured business models. There's no point in reinventing how P&L, balance sheet, and cash flow work together. The second important component here is also the flexibility, right? You don't want 100% standardized system that you cannot change and tweak to your specific requirements. So I think it's this model and flexibility, having both of those components. I think that's the key requirement from a vendor perspective. And the second one, well, what does it help? Well, let me reverse it. What we see often in practice is you have silo thinking. If you have your P&L team only working with P&L, well, guess what? The balance sheet team that's taking care of financing activities, they're planning with values where there's no link in between. And I mean, that's the easiest example to say, well, yes, you definitely need balance sheet and cash flow. When you think about reporting to banks updated data that you want to provide, it increases complexity massively if you don't have these interlinked worlds of, let's say, balance sheet and cash flow versus pure P&L.
Absolutely. I think for me, the biggest thing is is it worth the effort? Absolutely, because you've seen from each individual panelist today as to how important driver-based planning is. And then if you're not doing three-way, your last point there, Michael, is that the silo way of thinking. And then you go back to Rudy, where Rudy, you were talking all about, stakeholder management. All those KPIs will fall to pots because most of them is not just a P&L KPI. There are other elements. There are cash flow element. There are balance sheet element that come into play. So you will have to be doing this in very different places at very different time and not linked at all. So things will very, very quickly fall apart. Rudy, anything you would like to add there?
Yeah, no, exactly. I think that that linking, and as I said, we were talking about the stakeholders which have different objectives, dividends, solvency. That is really not just a P&L impact. It has a strong balance sheet impact in it, and not knowing how that is linked, that would lead to foolishness in decision making if you're not careful. So that interaction is something we have learned over the years that has been a key in our budgeting process.
Fantastic, thank you. Right, we've got time for another question. I will just field one general question, and what I will ask you guys is how to best implement driver-based planning. So I don't have driver-based planning at the moment. How do I go about implementing it? Or I have it, it's very partial. So Rudy, what do you think are the 1-2 key steps that you would tell our audiences? Guys, you need to adopt these.
Now, I think for any business model, right? I mean, of course, if you need to look at what drives most of your P&L balance sheet for your business. If you have a conglomerate, it's maybe more high level and a different way than if you have one product or one service in one industry. Then you have always where the business from a historical perspective have already some historical drivers. Start with that. Implement that, try to structure it across the organization, and then add complexity to it, add other drivers to it, and evolve. It's evolving. It's not a one-time big hit and you go from 0 to 100. You go gradually to that next phase.
Absolutely. Progress over perfection is, I always keep talking about. You've got to start somewhere and build on it. Ronald, what would you like to add? How do you go about doing driver-based planning? What would you tell the what do you think?
The right KPI depends on the right moment. For example, when you have a political environment that maybe the stockholder require you dividends, or if for example, when COVID-19 hits here in our region, the KPI is most relevant, focusing the cost to reducing the cost of because COVID-19 increased our cost. But it depends about what your customer want. It depends on the moment. It depends also in what you think about the future.
Absolutely. I think to that point, it's thinking about those external drivers that drive your business. A lot of business are very internally focused only. And of course, we're seeing through black swans, uncertainty, COVID, etc. Those external drivers are becoming more and more important. And you may be able to mine those, and there's a lot of data available outside of the current existing organization as well. Michael, lastly to you.
I would actually come from the strategic component again, from actually steering the organization. I would ask first the question, what's the right level of granularity? in certain areas that we want to have. And this should be, of course, the level and granularity that you want to steer the company on. So to what level down do you need a budget? Because that's where you want to steer. Is it a regional level per product? Is it on a cost center level? So that's the first thing that I would make sure you're clear on, right? Granularity. And then for the different areas, go at this level of granularity and try to find the right business logic, because in a very operational plan, you will have other business logic that makes sense versus on a more aggregated level. And again, there's no right or wrong. It really depends on what level do you want to steer your company at, and then find the right business logic that will reflect that.
Absolutely. It's every single case is to be treated very differently, and every business is differently. So it's really knowing the business and looking at each individual drivers and component as you mentioned there. Panelists, thank you very much for answering those questions. We've only got time for these questions today, but guys, please keep sending them. We will answer the rest via email. I've got a few last closing slides, so members of the panel, just stay on the camera, and I will run through these last few slides very, very quickly. Guys, thank you very much for your help with the FP&A Empowerment Survey 2021. It is now time for 2022, and your insight is very, very valuable. You know it takes 10 to 12 minutes. Please go on the link and share your insight with us, and of course, you will get a copy of that. Very, very insightful. And then what is next for your diary? So we've got FP&A in action, enhancing FP&A agility within supply chain planning, March the 10th, put it in your diary. And we also have the 5 critical roles for every financial planning and analysis team, FP&A team, a paper based on a paper that we did at the end of last year on April the 7th. Very, very important, very people orientated focus. So please put these couple of dates in your diary. A great time now to say thank you to our sponsor, Unit 4. Thank you very much for making this possible. A big thank you to our 4 panelists for making this event great, with great presentation and great insights. So panelists, thank you very much. A big thank you to all of the audience attending our meeting today. I hope it has been very beneficial to you guys. You've learned a lot, but you also shared with us a lot of insight within your own organization. Guys, keep in touch, and this is how you can keep in touch. It is now a good time to say goodbye, good morning, good afternoon, good evening. I hope you enjoyed the meeting. And please don't forget, give us another 30 seconds when I close this for the feedback form. Let us know how we did. Let us know what you would like to hear in the future as well. So ladies and gentlemen, with that, we conclude our meeting for today. Thank you very much for attending. Bye-bye for now, and we see you soon. Thank you. Bye-bye.